For many traders, getting funded is hard, but getting the first payout and keeping the account afterward is even harder. And psychology experts say this failure isn't random. Across prop firms worldwide, traders consistently report the same pattern. They get close to a payout, they collapse right before it, or they receive the payout then blow the account shortly after. According to trading psychologists, the issue isn't strategy, discipline, or effort, it's biology. The brain doesn't react to charts, it reacts to meaning. Experts explain that charts don't change near a payout. What changes is meaning. When a trader is a few trades away from a payout, the brain interprets that money as life-changing: security, freedom, identity, validation. Once meaning increases, the brain shifts from performance mode to protection mode. Neuroscience describes a phenomenon called reward proximity. As a reward gets closer, dopamine steadily increases, error monitoring intensifies, sensitivity to loss skyrockets. A $50 pullback early in a challenge feels normal. That same $50 pullback near a payout feels catastrophic. The chart hasn't changed, but the brain has. Early in a challenge, traders operate in approach mode, logical thinking, rule-based execution, patience. Near a payout, the brain flips into protection mode, fear of loss, emotional reactivity, urgency. Protection mode is run by the fight-or-flight system, which is faster and louder than logic. Once this system activates, discipline becomes physically inaccessible. As protection mode activates, the body sends warning signals: racing heart, shallow breathing, tight chest, tunnel vision. Psychologists say traders have 45 to 60 seconds at this stage to step away. If they don't, emotional decisions take over, and accounts are often lost within minutes. Why revenge trading feels uncontrollable? When threat perception rises, cortisol spikes, dopamine seeks relief. The brain searches for the fastest way to feel safe again. That's why traders jump back into trades, increase size, chase losses, even when they know it's wrong. This isn't lack of discipline, it's survival behavior. Why traders fail before the payout? Near a payout, the brain labels profits as mine. Any drawdown now feels like something is being taken away. This triggers loss aversion, panic exits, forced entries, oversizing. The closer the trader gets, the harder the brain fights to protect what it believes already exists. The false calm trap. Not all traders panic near payouts. Some feel oddly calm. Experts warn this can be a freeze response, a shutdown of emotional awareness. False calm looks like numbness, disconnection, automatic decisions. Traders in this state often sabotage without realizing it, then feel shocked when the account is gone. Why traders fail after the payout? Receiving a payout creates three major psychological shifts. Dopamine crash. Dopamine peaks during anticipation, not reward. Once the payout arrives, dopamine drops sharply. Normal trades feel like boring. Traders seek stimulation. This often leads to reckless risk-taking. Reduced self-monitoring. Before the payout, traders are hyper-focused. After the payout, the brain relaxes. Rules loosen, discipline fades, sloppiness creeps in. The mind thinks the job is done, but the market hasn't changed. Identity shock. Many traders unconsciously struggle with a new identity. I'm now a trader who gets paid. If that identity feels unfamiliar or unsafe, the brain tries to return to what feels normal: struggle. This leads to self-sabotage. The dangerous limbo zone. After a payout and before the next one, traders enter a low-pressure phase. This is where habits are encoded. If traders become sloppy here, the brain learns this is how funded trading works. Those habits resurface when pressure returns, often costing the next payout. Why slow is the only way forward? Experts emphasize one consistent solution: gradual exposure. Traders who stay funded reduce size early, stop trading sooner, normalize calm execution. They train their nervous system before pressure peaks, not during it. Recovering from a near payout blowup. When traders fail close to a payout, the loss is psychological, not just financial. Experts recommend taking days off before restarting, naming what happened without judgment, identifying the exact moment control was lost. Skipping this process leads to repeated failure. The core message. Most traders don't fail because they aren't skilled enough. They fail because their nervous system isn't prepared for success. Discipline doesn't fix this. Trying harder doesn't fix this. Regulation does. The final takeaway. Getting your first payout isn't about pushing harder. It's about staying calm when everything suddenly matters. Traders who understand this don't just get paid once, they stay paid.